JJ the CPA here. I hope you're doing well. I wanted to focus in now on the part that we need to start paying attention to, which is the forgiveness side. And we had a curveball thrown at us yesterday morning. So today is Saturday the 4th of April, and the SBA came out with a third version of the application, and it is inclusive of some additional guidance from the SBA, and we've got some information sheets. So one of the things I wanted to jump on is the curveball that came yesterday. And I know that there could be some that say, well, it wasn't a curveball, it was in the law. Well, the chapter was in the law, but the chapter that was in the law, which is chapter 24 of the Internal Revenue Code, is listed in the same area that chapter 21 and 22 are listed. Yep, stay awake. But all that's to say is that chapter 24 is defining wages in which taxes need to be withheld from. And I think the misinterpretation, if I could be so bold, by the SBA is that they're assuming that it is less withholdings. So in chapter 24, it talks about what taxes need to be withheld. Okay, all right. It doesn't mean, in my opinion, that then those taxes that were withheld are then excluded from loan forgiveness. No. So let me jump over here. This is what the SBA had sent out, and I've got a video yesterday. It's got some pink wording talking about the definition of payroll costs. So you'll need to watch that. But one of the things to note here is that we're talking Section G. Okay, so let me give you a little frame of reference. This is from the SBA. This came out on 4/3. And when we're down here, we're talking about how do I calculate the maximum amount I can borrow. In that video, I think I went through pretty clearly what are the wages that can be included. And in this, it said defined and detailed below in F. So when it's talking about the wages that are included that determine how much you can borrow, then if you scroll on down to F, it says here's what qualifies as payroll costs. Okay, you go through all that stuff. It includes the retirement, includes the health care, includes the state taxes, and then this should have said or right here, in my opinion. The fact that it said and, there was a few people that thought that then those that paid sole proprietors could include it. That was clearly stated that you could not. But here's what's throwing everybody is G. It says, is there anything that is expressly excluded from the definition of payroll costs? And it says, yes, the Act expressly excludes the following. Okay, talking about in the U.S., over 100. And then this is saying, this is the section that we're talking about here, is that, well, it looks like it's not going to highlight it, so just know we're talking about this section. Okay, if you're following along, like you've got it out, it's G. Okay, number 3, federal employment taxes imposed or withheld between February 15th, 2020 and June 30, 2020, including the employees and employers' share of FICA and Railroad Retirement Act taxes and income taxes required to be withheld from employees. What does that actually mean? We're talking about Social Security and Medicare. We're talking about the 7.65%. We're talking about then the federal income tax that's withheld. Okay, and really, if you're reading this, it says federal employment taxes imposed. This is this, and then income tax required to be withheld from employees. So that does not include the state taxes that are to be withheld. But when you look at the actual aspect of the tax law, and we're turning to, excuse me, I've got it here on my, yeah, there we go. Let's refresh here. So when we're talking about, I don't know a way to make this actually bigger, but this is in the CARES Act. But then when we're talking about what is the definition of payroll costs, okay, that's what that section is dealing with. And F in the guidance from the SBA is covering this section. That is F, okay? And actually even including this down here. That's is F, okay? And then G in the guidance, okay? Not G here, but G in the guidance is covering this area, okay? So if I go and I look at the this section G, okay, and we're now at 3, and we're talking about these taxes right here, okay, these federal employment taxes imposed or withheld between this date, which by the way, that's the covered date as we're related to this, including the employees or employer's share of FICA and Railroad Retirement Acts and income taxes required to be withheld for employees. The reason I'm rereading that to you is that now we're going to go back over to, boy, I've got just too many things open up here. We're going to go back over to, just keep in mind it's all free, so if you want to give me a thumbs down because I had to fumble for the for the law, then I would appreciate you just stopping and watching. This is all free. So right here in the actual law, right, so it says shall not include. So what I'm matching up for you, for us, okay, is what is this actually talking about? So, right, can it include comp in excess of 100 grand, right? They have to be an employee, the sick, and the family leave, okay? So if we're talking, there's the employee has to be in the U.S., it's the 100, can exceed, here's the qualified family sick, blah, 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 right? And then we're talking about this federal employment part. So then what we're really focusing in on is this, okay? It's the BB, okay? And if you're really wanting to get the nitty gritty here, it's 1102, okay? And if I go down, this is in A, okay? This is all in that first section, okay? It's in A, and well, I guess I'm not going to try and figure that out, meaning not going to waste your time. But this is now the section that we're talking about. Taxes imposed or withheld under chapters 22 and 23, 21, 22, and 24. So if we go and we simply go to, I mean, all I'm going to do is put IRS chapter 21, 22. And if we are looking at chapter 21, okay, if we're talking about chapter 21, Federal Insurance Contribution Act, okay, tax on employees, tax on employers, general provision, okay. So we can double click on this, but this is where we're at. We're in, that says 26, but we're in chapter 21. See that? Chapter 21. And what it's talking about here is, okay, this is what the tax is subject to, okay? And this is related to, as it says right there, it's the Federal Insurance Contribution Act, right? So you can peruse it. This is what it's talking about, right? Old age survivors, hospital insurance, additional tax. Then if we go to section of the law 22, okay, I'm just going back to my search here. You know, there's only so much I should have had up in, I should have had this up in advance, and I'm not wasting your time. But here's chapter 22. It's the Railroad Retirement Tax Act, okay, tax on employees, right? It's just talking about what is the tax on employees. And then if we go to chapter 24, because it skips for whatever reason, they don't talk about chapter 23, talks about chapter 24. So we go into chapter 24, definitions, and let me back that up. It says collection of income tax at source on wages. So when I'm looking here, look how it just starts. In chapter 24, okay, it seems confusing that you see a 26 there, but we're in chapter 24, okay? Wages, for purpose of this chapter, the term wages means, that's the whole purpose of these. This is the whole purpose of these items, okay? What they're pointing out is, here are things that are not wages. Here are things that are considered wages. And the purpose of that, those three, is it's telling you if this is wages, you need to withhold tax on it. This is not wages, so you're not required to withhold tax on it. When I read the law initially, I was like, what are these chapters doing in this, right? And when I read it, popped over to 21, 22, 24, didn't really need to spend a lot of time on it from the standpoint of, I've always known those chapters to be the ones that are simply defining wages that then have to have those particular taxes withheld on, right? You can't just say you got to withhold taxes on wages, because then the next question is, well, what is wages? And you may say, well, that's obvious. Well, is it? I mean, the IRS isn't going to allow me to give a gift to my employees, because if I'm giving them money and it's anything and it's over 25 bucks monetary value in a year, it's a wage to them, okay? Point is that these three chapters, in my opinion, is addressing the definition of wages, right? So when I'm talking here, down here, this BB shall not include, okay? So what I want you to note here, this is my whole point of this video, is that in the SBA, they've said this: federal employment taxes imposed or withheld between blah, 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 including employees, employer's share of FICA. Okay, here's the deal with the SBA. The employer portion's not even included. Okay, that was in the Senate version. It went through the House, and when it became law, employer taxes are not even included. So why is it even being stated here? It's being stated here because I'm sure it's very intelligent, wonderful, a group of individuals that had all great intentions, and they're trying their best to interpret a law that just came into play like literally a week ago, and there's, everything's on the line, and hurry and get it out. And there's people getting ready to lose their businesses, define it for us and get it out there. And this is now talking about the forgiveness side, right? So it's not as relevant right now, meaning get people their money. Okay, it did cause some confusion. See the other video on why this is not a factor in determining how much somebody can borrow. But when you're talking about this, and we're going back to the law right here, and we're going to BB, it says taxes imposed or withheld under chapters 21, 22, and 20 or 24, okay, the Internal Revenue Code 1986 covered period. So the covered period, okay, if we go back up top, it tells us what the covered period is right there. Covered period. Okay, we're in section 1102. It's like right at the beginning. Covered period. Okay, is February 15th, 2020 to June 30, 2020. Okay, what I believe this is indicating, because this is a fact, okay, if you read further into this and you read other interpretations that have come out from the government, what this is addressing, in my opinion, is the fact that you can't double up, in the sense of if you are getting tax credits for your employees being out and you're paying them, right? So there's 4 different kinds of tax credits. I've got a lot of videos on those. So let's just say that you're in a situation where you have employees that are out and you're paying them, you get a tax credit. Okay, well, time out, because if you got money from the government in your PPP, and we're going to have other videos about that, that's not your money, right? I mean, the government gave it to you, right? And if you're using the government's money, that's actually not a tax deduction. Okay, and I'm waiting to do those videos until later. So kind of a weird concept to think through, but know this. You can't double dip, okay? Meaning You couldn't walk into the SBA, the loan officer that you're going to be working with, and say, hey, here's all my taxes. Okay, here's all the taxes that I had, but I took this tax credit. Okay, but I want to count the gross. What this is saying is, if you owe $10,000 in employer taxes, right? Social Security, Medicare, right? Withheld, a match, federal withholding, right? That's all the money that gets paid in. That's why we have these wonderful payroll companies like Alliant here in Edmond. But that's the federal tax that gets paid in, right? The way that these tax credits are experienced, the way that it helps us, the small business owner, and the immediate relief is that whatever the credit is, directly and immediately reduces the amount that the employer pays into the IRS, right? This is going back to the Family's First Coronavirus Act. It seems like it was eons ago. It was basically about a month and a week, 5 weeks ago. Anyways, here's the thing to think through, right? Here's the thing to think through when you know, like me, I'm trying to wrap my head around this is, okay, so when I hand in a report for forgiveness and it says, here was my payroll taxes for all of these items, Social Security, Medicare, that was withheld and matched, as well as the federal withholding, okay, which is just encompassed in the withholdings within the employee's wages. And then you have the taxes on top. But it's that component, okay, that you go, oh, I'm getting ready to send that in. And then these tax credits go, hey, before you send that in, what were your tax credits? Because you're getting ready to throw $10,000, deposit $10,000, pay $10,000 in employer taxes, okay? And when you then determine your credit, I mean, IRS has examples of this very directly. If you have a $4,000 tax credit, then you don't throw in $10,000, okay? If you have a $4,000 tax credit, you're only going to send in $6,000, okay? That's how you got the immediate relief. So maybe this is starting to click. It's like, okay, so I didn't spend 6 as an employer. I'm sorry, I didn't spend 10 as an employer, right? I didn't send in 10 grand. I only sent in 6 grand because I got this $4,000 credit. So I would agree wholeheartedly, and this is how I understood it until yesterday morning, which is Friday, April 3rd, is that because it's interpreted very clearly elsewhere, that if you get a tax credit, in essence, you don't then get to count that tax. Does that make sense? Because you could give a document, and on that document, which is a Form 941, it's like, oh, okay, so you had $10,000 in taxes, so we're going to be able to forgive this. And it's like, no, hold up, time out. Because over here, okay, you got yourself a tax credit. So when you're saying to the government, to SBA, when you're trying to get your loan forgiven, it seems fair, makes a lot of sense to go, well, you know what? I didn't pay 10. I only paid 6. So 6 goes on the list. It goes part of the dollars that are then forgiven, right? Because I didn't spend 10. I only spent 6. So when I'm telling the IRS, or I'm sorry, when I'm telling SBA through the banker, here's where I spent my money. On paper, it's going to look like I spent 10, but in reality, I only spent 6. So what I feel that was addressing was the fact that there's going to be credits that are given, and you don't get to exclude considering the credit. So that makes a lot of sense to me. Not yet am I talking about what was sent out yesterday. I'm just saying that made sense to me, and it's been in other videos, just saying, hey, if you're using money from PPP to pay wages, okay, you're not going to get those credits. Or if you do take those credits, it's going to affect your forgiveness because you didn't actually pay it. Okay, let's just go with the fact that maybe PPP money is 10 grand to you. Okay, and just go with me in a simple example. Okay, I got 10 grand, but I only spent 6. But I might have paperwork to say, hey, look at this. I spent 10 grand. Here you go. I spent 10. It says right here, I spent 10 grand. Okay, but you didn't spend 10 grand, you only spent 6. So when it's time to go and figure out your loan forgiveness, we can only count 6 grand. Okay, well you know what? That makes sense. That makes sense to me because it didn't get paid. So I think what we're looking at here is if we go back to this, I kind of feel like maybe we're in a situation where that's just not a complete sentence or a complete thought or paragraph. Because what's interesting there for me is that it's saying federal employment taxes imposed withheld between this date, including employees, employers, and income taxes required to be withheld. Okay? Well, when you're trying to figure out how you can take that tax credit that we've been talking about, the employer tax credit, everything that's included in that, okay? Everything that's included in that is what is then included as dollars you can take your credit against. Okay? So let me be clear. You're getting a tax credit. It's limited to the employer's Social Security taxes. Okay? So it's limited. All right? So when you're then looking at, though, I have this credit of $3,000, well, if in that payroll period, your Social Security taxes is only $600, the IRS has said as part of the Family's First Coronavirus Act, hey, listen, if you only have $600 in that payroll period of Social Security taxes, but you're sitting on a $3,000 credit, you know what, you just go ahead and you reduce down any of these other taxes that you're getting ready to pay in. Okay? So even though you've withheld Social Security and Medicare, you're matching Social Security, you're matching Medicare, and you've had federal unemployment tax, so that's this ball of payroll tax money that then gets sent, right? That's that 10 grand, okay? Getting ready to send 10 grand, and the IRS goes, oh, hey, hang on a second. Do you have a tax credit? And you're like, yeah, I got a tax credit, but I don't have enough Social Security tax to offset it, right? Because if I only have $600 of Social Security tax on the Medicare, on the employer side, initially you think, well, I can only take up to the Social Security limit. It's like, no. Social Security limit for a vast period of time, depending on how you read it. If we're in second quarter, it's for sure like, what is second quarter's? All of second quarter's employer Social Security tax. That's your cap, not per payroll. But the IRS has indicated on the credits very clearly, listen, if you're getting ready to pay in 10 grand and you've got a tax credit of 3 or 4 grand, even though in that 10 grand, that's not enough technically Social Security tax, no problem, because you have all these other taxes that you can set it off against. And that's what that's saying right there. Okay, federal employment taxes imposed or withheld, including and income taxes required to be withheld. So I just don't think it's a complete sentence. It's not a complete thought. It's not a complete paragraph, so stay tuned. And what do I mean by that? What I mean is that I believe what will ultimately be added onto that is if those taxes that were imposed and withheld, including all 5 of these things, all 5 of those kind of taxes, okay, if that was withheld, but you didn't pay it all in, the amount you didn't pay in, okay, you're not going to get forgiven for that portion. Go back to what I was telling you, okay? On paper, you had $10,000 of those 5 categories of tax. You had $10,000 on paper, right, on your Form 941. But the fact is, of those taxes, if you took a tax credit against it and you didn't pay in 10 grand to the government, then that credit, that difference, that literal cash that didn't leave your pocket, small business owner, well, that's not going to be something that you get to consider a payroll cost. Okay? I'll state this another way. Here's all these taxes that are payroll costs. Like, forget triple P, forget any of this. Okay? It's a fact in chapters 21, 22, and 24. It's talking about these taxes. Okay? All of these taxes and what's wages and what do you withhold them on and the rates and all that good stuff. So if those taxes have been imposed and they've been withheld, but not all of it got paid in, what this is really needing to clarify and add additional information is to say, then that phantom amount doesn't get to be included in your payroll costs. Right? So you sit there and you go, okay, here's these 5 things. Here's these 5 different taxes that it's listed. And it's during the covered period. Okay? So in that covered period, right, which is when the 8 weeks needs to encompass, you have these 5 taxes. But you have PPP money. Okay? That's why this even matters. So you have PPP money, okay, and you're paying your employees. These taxes are being withheld, and you owe taxes to the government, the employer taxes. But what's also going on parallel, okay, if this is the CARES Act and PPP money, what's going on parallel is employees are out, they're home, that is, but maybe they're getting paid. So there's 2 things going on here. What the Act clearly is stating, as I interpreted it from the beginning, is that you don't get both. Meaning, if you've got money over here and money and tax credits over here, okay, you don't get both. This is free money, here's a tax credit. If you're taking the tax credit, okay, then you're going to have to offset that from loan forgiveness. So I'll say it a different way, which is kind of the same way. When you go back in for a discussion with the banker to get your loan forgiven, and you're coming in with check copies and receipts and bank statements because you need to prove what you paid, when you paid it, okay? We'll have plenty of videos. I will have plenty of videos coming on that because that's going to be vital and important. But when you're going back in and you set down a form 941 and you go, hey, here's what I spent in payroll. Right? Everything that's listed there, it's included. Here's what I paid in payroll. But the law, like the actual law, right? Section 1102, makes it clear to us that even though on paper it may show that my taxes were 10 grand, if I experienced a $4,000 tax credit, which means I didn't pay in $4,000 of taxes, I can't get forgiven on something I didn't spend. Makes sense. When you read the interpretation, and we'll give SBA a break here, right? But when you read this interpretation, it's almost like it's the beginning of the thought. It's almost like the rest of the sentence, the rest of the paragraph was left out, which in essence would be federal employment taxes imposed or withheld between February 15, 2020 and June 2020, including an employee's and employer's share of FICA and Railroad Retirement Act taxes and income taxes required to be withheld from employees that was not paid in. Okay? It would be a very clear statement to me if it said, hey, here's what's not payroll here's what's not payroll cash, y'all. Here's what's not payroll costs. Okay? These taxes that you didn't pay in. These taxes that you didn't pay in. The way that it's written here is it's saying, hey, any of these taxes, they don't count. Well, the way it's written, yeah, okay, so these taxes don't count. It's not the spirit of the law. That wasn't the intent of Congress. There's no way it's possible. It's impossible that this is not missing a sentence. Because what this is saying is, hey, what are payroll costs? You have to define these things to say, okay, of these 5 things, the amount that you didn't pay in, you don't get to include in payroll cost. I haven't heard anybody writing it this way or thinking of it this way, but here's what I'm doing. I'm comparing it to the law, okay? Because at the end of the day, this has no authority in any way, shape, or form. Zero, zip, none. It's a white paper memo from the SBA. Not to say that, I mean, the SBA has a lot of power and influence, and what they say is going to go. But, you know, they have to follow the law. They have to follow the law. And here's why I know what I'm talking about, because look at what it's talking down here. Right there, it is these, excuse me, it's those tax credits, what I just highlighted there. Those are those tax credits I was just telling you about. It's saying, listen, it's not going to include tax credits. You didn't pay it in, you don't get to count it as a payroll cost. So right here, does not include compensation to individuals of an annual salary, 100,000, over 100,000. Okay, taxes imposed, any compensation of an employee placed outside the U.S., qualified leave wages from which credit is allowed, qualified family leave wages from which a credit is allowed. Okay, now you're going to look at this and go, I don't know that I'm with you anymore, JJ. I don't know that I'm with you anymore, because this says this, and then we're down to DD, and we're down to EE. Well, let's go here. Okay. Qualified sick family leave wages for which a credit allowed, Section 701. Okay. The Family First Coronavirus Response Act, that's what I'm talking about here. Qualified sick and family leave wages for which a credit is allowed under Section 7003. Okay. That credit is applied to these things up here. Okay. So in my opinion, maybe what would make it clear is not having that there. Okay. Now I know when we go to the law, we go, okay, well, but JJ, look, I mean, we have this, and we have this, and we have this. Okay. Well, it's talking about taxes imposed and withheld under this chapter in which there were credits taken. So in my opinion, if we just didn't have this, we'd be reading this all as one paragraph. And to me, I'd be going, okay, well, yeah, that makes sense. You know, minus this thing right here, get rid of that thing, right? Here's all the taxes that were imposed and withheld that are due. Here's those 5 things that you get to take a credit against. Okay? Qualified sick and family leave wages for which a credit is allowed under sections blah, blah, blah. Well, that credit is allowed against these items. So right now, the conclusion I think for most is that come loan forgiveness time, whatever's been withheld won't be forgiven. And if we were making a decision based on SBA only, that might be the conclusion. I hate to go out on a limb and tell a client, hey, you know what, you go ahead and borrow all that money. SBA doesn't, you know, they got to finish that. Don't worry, they're going to finish it. Okay. And what if they don't? Right. So all I can do is assess and interpret the law as it stands now. And that's why I'm telling you that's what I'm dealing with right here. Okay. If you walk into a court of law, to the IRS, this stuff doesn't stand. Okay, when you go to the IRS and they have their, frequently asked questions like they do here, okay, it indicates that it has no authority and you can't rely on it in any way, shape, or form. Okay, because you have to look at the law. So I'm not necessarily seeing anything here that says that, but it's a fact. Okay, because this is not law. These are questions and answers. It's not law. Okay, I didn't realize I didn't have the screen. I was just going to the bottom to see what it had indicated. But this is just questions and answers. This isn't the law. This is the law. This is what we deal with. This is the law. This right here is an interpretation of the law. So I do think the SBA is absolutely moving at the speed of light. Okay, they already had to have 3 different versions of the application come out. I am getting word from clients that they're getting word from their banks that loans have been submitted and accepted. So money may be coming out next week. That'd be great. They did put out this information. If you were to read in the law, because there was controversy on this until yesterday, but if we were to read in the law and we're looking at the definition of payroll costs, okay, there were some, and I was, pretty adamant and feeling a little upset about it when I was talking about it. But when it says, here's payroll costs right here, jeez, I keep forgetting I didn't move it over. So if we're looking at the law, okay, and we have payroll costs, right? It says, what are payroll costs? It means, and it's all this stuff. But then for some reason, everybody started losing perspective a little bit, because never in 1 million years, ever, is paying a sole proprietor, an independent contractor, a self-employed individual that you're sending a 1099 to would ever be considered payroll cost. Ever. And so you have law firms out there that are getting real cute, trying to make sure they were staying involved with it. And it was just because there's an and there, okay? It said payroll cost is this and this. It should have just said or, okay? And so then the SBA came out and said, hey, listen, y'all, no, I don't know that I'll be able to get to it in time. But they said, no, you're not going to be able to include paying 1099 people, sillies. Okay, that's not considered part of what you get to be including to determine your loan. And the reason why is that you are in a situation as an independent contractor that you can go and get one of these yourselves. And I found it. Okay, right there. Do independent contractors count as employees for purposes of the PPP loan forgiveness? No. Independent contractors have the ability to apply for a PPP loan on their own, so they do not count for purposes of the borrower's PPP loan forgiveness. And then it's up top, and also does it count for monies that can be used to calculate up the amount that you can borrow. So at the end of the day, I feel like, because I've applied for a PPP loan, that if I spend it properly within the 8 weeks, then I'll be in a circumstance where it'll be forgiven. And I think that there'll be more information that comes out on that. Now, I can't guarantee it, but there's no way in these circumstances, and with Triple P and with the CARES Act and with all the time and effort going into this and the purpose of it, would they say to somebody, hey, listen, we're going to give you $1,000, Okay. And it's for your employees, business owner, by the way. And if you're an employee, you can be included in this, but it's not even really money for you. It's money for your employees. And you can pay some utilities and some rent and some interest and the health insurance and your state taxes, right? Telephone, right? Internet. But at least 75% of this goes to payroll. You're not going to be able to pocket this. And I need you to spend it within 8 weeks, business owner. Okay? But hey, but by the way, when you go to pay it back, anything that was withheld from your employee's pay or anything that you matched, yeah, we're not going to forgive that, you know. There's no way that is the case. I understand it reads that way, and you know, I even I was like, wow, I guess it's not going to include it. But there's no way, first of all. And second of all, that's just not a complete sentence. It's not compacted together properly. SBA's running as fast as they can. Now, it'd be nice if they would have better clarified that. And there might even be people in SBA going, well, no, I mean, I talked with such and such, and, you know, that really does seem to be our interpretation, that whatever is withheld will not be forgiven. But then you're going to have employers all over the place going, well, then why am I even getting this money? Why am I getting this money if I'm not going to get, let's say, 20% of it forgiven? Because I'm closed, they're getting unemployment. If I can't reopen my doors, I'm stuck owing money for just giving it to the employees. Right? I didn't get to keep any of it. It went to employees and payroll taxes. But then I'm on the hook for whatever my employees withheld. Okay, because we already know that employer payroll taxes are not included. That's my first clue as I was really digging in on this G. I was just really digging in. And I'm like, why in the world is it talking about employer taxes? Because we already know that's not already included. Employer taxes are not included in the amount to determine what's borrowed, and it's not included in determining the amount that's forgiven, like ever. Like it's not in the law. It's not included, period. So why in the world is it being included in G? Well, it's being included in G properly because it's missing some of the sentence. What G's talking about here is, hey, y'all, listen up, okay? This is G, okay? They're saying, hey, on these taxes that get paid in, if you get a credit on them, you don't get to count that, okay? It's just these two things go together, okay? You have to define what the credit went against to know then what it offset, right? So if it's saying here, okay, qualified sick in which there was a credit allowed, okay, well, the credit was allowed and offset against that. It goes together. Just the way the law had that and in there and maybe shouldn't, maybe there shouldn't be this bullet point number 4, Roman numeral number 4. Because when you're looking at the law, okay, we come down here, what's not included in payroll cost, okay, excess of 100, and then we have withheld, and we have this, and we have this, and we have this. And those are all tied together. And by the way, chapters 21, 22, and 24 is about defining it's about defining wages. Okay? So what it's saying is if chapter 21, 22, and 24 conclude that it's not a wage, okay, and these are not new chapters, then you can't include it in payroll cost. Makes sense? Right? So there's certain things that an employer may pay for. You know, one of them is, you know, there's a lawsuit. And so now the employee is getting paid by the employer, but the law disallows that from being considering wages. Okay? It's not wages, which means there's no tax that needs to be withheld on it. So when you're then deciding, well, what are wages that are going to be included, right? I mean, it gives us a definition, but when anybody else ever, right, you know, the world of taxes didn't start 5 weeks ago. This law, these chapters are like the pillars, right? 21, 22, and 24 defines wages that you then need to withhold tax against. Okay, because you can't just say, well, withhold taxes against wages. Okay, well, what are wages? Well, now we have chapters 21, 22, and 24. Now, why is it 3 chapters? Because we got 3 different kinds of taxes, right? Right? We got Social Security, we got Medicare. You know, it uses the word railroad because that's still included. And income tax. You have to have 3 chapters because when you look at chapter 21, part of what you're looking at in there is the section 125 plan, okay, which is a cafeteria plan. And so when you have a cafeteria plan and someone pays their health insurance through that, it states in there that that is then not wages to assess, impose, or withhold tax against. You have an employee that gets paid, you know, $2,000. They run through $100 of health insurance that they're paying for, but under Code Section 125, which is a cafeteria plan, Chapter 21, 22, 24, all encompassing, but Chapter 21, I believe it is, basically is saying, yep, if it's under these things, that's not considered wages. Okay, Chapter 22, okay, it's tackling the railroad. Let's see. Okay, so that was chapters 26. Okay, collection. This is defining in chapters 24 what wages do you have to withhold taxes against. You can't just say wages, because do you know that on your W-2, right, there's 3 boxes of wages. There's federal, there's Medicare wages, and there's Social Security wages. Okay, chapter 21, 22, and 24. Basically, right? So I've got another video saying I wish they would even define what wages are we getting to count. I've gone with Medicare, scratch that. No, yeah, I've gone with Medicare wages, which is box 5 or line 5C, column 1 on 941, because it's the most pure. It's the most pure figure. This right here is saying, hey, here's wages that you have to, you, small business owner, have to withhold taxes on. This is not interpreted as withholding taxes. This is, here's wages that you have to withhold taxes on. And guess what? When you're talking about wages here and you're digging in, if you have a retirement plan that you're paying into, okay, and that reduces down your wages, then that is wages that you as an employer do not impose or collect tax on. Follow? So you put $10,000 in a 401k plan. This is talking about the fact that the employer and the employee do not consider it wages for the purposes of withholding income taxes. Okay, and then when we go to section 22, and we're looking at the railroad retirement, okay, tax on employees, okay, this is defining, I'm not sure what's, I missed not being, okay. So this is defining who's an employee. It's talking about the rate of tax. It's talking about what are the wages that would be included. Okay, and then if we go to chapter 21, go to chapter 21. So in chapter 21, Tax on Employees, Federal Insurance Contributions Act. Okay, look at rate of tax. And it's defining what wages are that are subject to this tax. So when we go and we look carefully and we say, well, I guess we don't get to include those taxes in forgiveness. Well, the way that's written, that'd definitely be the conclusion. But what this is right here, if you're following here, guess what? Right? This is chapter 21, right? This right here is chapter 22, okay? And this right here is chapter 24. And what it's saying is, if you're going to get a credit and then you're not paying in these taxes here because you got a credit, okay, then you're not going to be able to include that in payroll costs. So I've been waiting to really dive and look and think and analyze, and my son Cooper, 17, cooked me a big fat steak on the grill. Like, he cooked it, and we had corn and we had some fresh green beans, and he even rinsed some strawberries and some blackberries and put it in a bowl, which was great because we were talking about, how he's going to get drafted to the MLB and what his signing bonus should be and what life looks like, when he's in the MLB. He's a 6'5" lefty, junior, and he's just done really well. First game of the season, he struck out 10 batters and had a no-hitter in high school ball at 7 innings. He pitched 6 of them and had a no-hitter and 10 strikeouts. His reliever came in and they finished out, had a no-hitter first game of the year. And then the last game of the year last year, he was on the DL, wasn't even supposed to pitch, begged his coach to get in, which we love and adore. He's been Cooper's pitching coach since he was 8. But anyways, came in, was only supposed to pitch 1 inning. He only could pitch up to 25 pitches, and came in the 5th inning. They play 7, so he pitched in the 5th, the 6th, and the 7th, and pitched all 3 of those innings under 25 pitches and had 5 strikeouts, struck out 5 batters. So he came into inning 5 and struck out the first 2 batters. Struck out another batter in inning 6 and struck out the first 2 batters he faced in inning 7. Point is I got to visit with him about that, things that matter, and have a nice steak, which was such a treat. We visited, and I did the dishes, and we talked. And while that's happening back here, the mind of JJ, the CPA, is going and working and settling in on what is this really talking about here? What is this really talking about here? And then it really clicked that, in my opinion, I get that maybe it is proper to have this 4 here, whatever, right? But this all ties together. And I would say that if you have credits and you didn't pay in that amount, seems pretty logical that because you didn't pay it, you don't get to include it in an amount that you paid for forgiveness. That makes total sense. So I can just say I could almost guarantee that this will get further clarified by the SBA. Let's give them a moment. We do have some time. I did talk to a few clients, and we were maybe initially wondering, well, should we do it anyways? I don't mean we, them. And the thing to know is you got to spend the money, right? You have to pay the employees. So one of my clients had said, well, here's what I'll do then. If you think that 20% of this won't be forgiven, then I'll just set aside 20%. I said, well, yes, true, you could, but you have to pay the employees. You have to use all the money. So there's really no way that, I don't care what side of the aisle you're in, there's no way it was the intention of the authors and of the, our congressmen and our senators and the White House There was no way their intention was, hey, employers, we're going to give you $1, but no matter what, you're going to owe 20 cents back to us. When I'm giving you this $1 so you'll go pay your employees. Because if you give someone $1 and you say, go pay your employees, but you're going to owe me 20 cents on that. A small business owner doesn't mean they don't have a heart, but it's like, well, I don't know why do I want to do that? Because what if I'm not in business in 6 months and now I'm left with debt? You know, and then a small business owner or a business owner be like, well, maybe they should just go get some unemployment because I'm not on the hook for that. Maybe they should just go get some federal unemployment because I'm not on the hook for that. Basically, if we're taking this to be what it is, I'm going to get $1 and I got to owe 20 cents? No way that's the case. No way that's the case. So I'm going to get the full amount that I possibly qualify for. And I'm fully expecting that if I follow the rules of the 8 weeks and at least 75% goes to payroll and my head count stays the same, which it will, it'll all be forgiven. So time will see. I really enjoyed, I didn't even expect to talk this long, but I was really enjoying addressing this and really pulling it out because in some ways I kind of was doing it with you. But I really think at the end of the day, I feel even more comfortable than I did when I first sat down to shoot this video that no way, this is the ultimate answer, that the amount that's withheld is going to be unforgivable. What it's going to be is just like what's in the law, right? Just like what's in the law, that's the amount that won't be forgivable, which are the credits. And so I've been asked time and time again, you're like, JJ, where are you getting your information? Right here. It was free, and you just read it over and over. And you go and you research the chapters. You research, what is 21? What is 22? What is 24? Why is this put here? Why is that put there? Okay? And it's clear that this is all tied together to say, hey, even though these are payroll taxes, if you take these credits against it, you're not going to be able to get that amount forgiven. Bam! All right, well, I really appreciate you if you've made it to here. And I hope that you picked up some good stuff. I hope you actually feel more comfortable with getting your PPP money. I do. I feel more relieved. I started to really kind of feel a little stressed about that. So at the end of the day, get your PPP money. If you're getting PPP, do not get an EIDL, period. Go see some of my other videos. And right now, start thinking through that you need to come back and watch the videos that I'm going to be doing on how are we going to track expenses, how are we going to make sure that this gets forgiven, what are the rules, what are the regulations related to that, because you can't figure it out when the 8 weeks is over. You have to know it going in so that the purpose of this is met, which is you as the business owner are getting the money that you need, that you have to have, and that you should be fully forgiven for it. So there's more work ahead on this, and probably the heavier lifting is yet to come on this. But here's the good thing. I'm so glad that I've been getting messages from clients that we're in a circumstance where things are getting approved and submitted, or submitted and approved. So hopefully we're going to see some money next week. Hey, I'd love it if you'd subscribe. I mean, I would really appreciate it. And thanks for tuning in, and more to come. All right. Hey, JJ the CPA out.